Hi, traders. Today I want us to review the trades, how the trades are going. The AUDCHF pair is currently in negative. It's expected. The fluctuation is normal. So far, we are in the right direction. It will fluctuate a bit before it now goes into profit. I want us to add another pair, and our target is to get a minimum of 1000 pips. So we are going to be analyzing pounds JPY, that is pounds Japanese yen. As usual, we are going to open the charts into 6 places so that we can do our top down analysis. So this is overview of the 6 charts. We are going to do a top down analysis starting from the monthly time frame. So when you look at the 1 hour time frame now, you will find out that it will not be easy for you to predict the direction of the market. But when you go to the monthly time frame, it will be easier for you because you will now have the overall direction of the market. The market is currently bullish. So we are going to look at if we are going to find anything that will help us to make analysis. We can't find any trend line, any support and resistance in this area. So let's look for a trend line. We can see a trend line. We can see a trend line on the monthly chart. So first, second touch in the lower, first, second, we will be expecting the price to come and touch this trend line. So price have already made the third touch, 1, 2, 3 in this trend line. So we are expecting another move down. So our focus is that price will move from this area to this area. So this may take some maybe 2, 3 months to happen. So that is why you need to be patient. Weekly time frame. Let's see whether there is anything happening in the weekly time frame. Can we identify any pattern? There is no support and resistance. You can see nothing is this area. So let's draw a trend line. So we're able to draw a trend line. Ideally, you draw the trend line from the point of origin of the price. So this is the upper trend line. So let's draw the lower trend line. This is the lower trend line. So we have in the upper trend line, we have higher highs, and in the lower trend line, we have lower highs. So the price is making ascending, and you can see that each higher high is with each higher high, there is an expansion of the trend channel. So the price is making a expanding ascending channel, which we usually call ascending broadening wedge. So our plan now will be to sell and wait for price to come to this area. In addition to the trend line, I can equally see harmonic motion, harmonic pattern. So this is just a confluence. So this is a confluence. So we may not bother going to the 1 hour daily time frame, but let's just see what is happening in the daily time frame. So we equally have a trend line in the daily time frame. We have a trend line, and we can connect both. So you can see that we have ascending broadening wedge. So we're expecting price to come down to this area. So we are going to risk 0.5%. So 0.5% of 220K is about $1,000. So we are going to be risking $1,000 in this trade. So if you are trading prop firm, you find out that if you are risking such amount per trade, it will be very difficult for you to lose a challenge in prop firm. So let me see if we have further confluences on this trade. So we have further confluences. TDI is almost at the upper band of the Bollinger Band. So we have a confluence. So we are going to sell this trade and target this area. This trade is going to last for many days. So we're anticipating that this trade will last for up to 4 weeks or 6 weeks. So let's sell. We are selling with 0.50, and let me go to a chart where I will be seeing the trade level. So this is, we're anticipating this is the trend line. This is the trend line. Then we have another trend line here. So we are going to make use of this one. So the risk reward for this trade is made a mistake. Risk reward is up to, let's say we put our stop loss immediately above. So it should be around 1:4, 4R. That is our risk reward. So let's sell. We have already sold the pair. So let's see how it goes. So if we put our stop loss here, then we can sell another. This is how much are we risking. We are risking 300 in this one. So we're expecting to make 3 times 4 should be 1,200. So we're expecting to take profit in this area. So we take one more, two more. Let's use our take profit. script. So we are going to wait for price to come down to this area. So let's see how the whole thing will turn out. So this is just how to trade like a professional. This is how professionals trade. They don't scalp. They look for patterns, and when they enter the market, they will be patient and wait for trades to evolve. They are not interested in scalping. They are not interested in being in the screen 24 hours. So scalping makes you to live a stressful life. The essence of trading is to have freedom. And then the only way you can have freedom is by trading on the monthly, weekly, and daily time frame. So feel free to subscribe, like, and share this video with your loved ones. Also, let me know your opinion and your thoughts about this analysis and this trade. Thank you.